right? So how do you calculate that without the potential renter feeling like you're price gouging?
So this is exactly why I wanted to talk about this.
Because I've heard, like, oh, you'll do the thing where it's like, oh, don't worry, we'll hold the gold for you, and then once you buy X amount, we'll send you a full bar. But then it turns out to be a scam, and you've now given these people like the amount of a full bar of gold over the course of a few years or so. So how do you avoid those things, or like what should people be looking for if they're going to start buying metals? All right, everybody, welcome back to another episode of the 1% Podcast. I'm your host, Vin End.
And I'm Shane.
And today we're actually going to start up like a little very, very mini series. Will be like maybe 2 to 3 episodes or so on this specific thing. Where today the main focus is going to be on Shane, and we're going to talk about how his investments have panned out. He's going to dive into the deeper specifics about what he's done and what's made them successful, or what to watch out for. And he's really going to give you a deeper inside scoop. We noticed a lot of you are really enjoying the video about what we're doing based on how we're trying to invest and utilize our money to help us grow and support our own livelihoods. So we figured it'd be massively valuable to you guys, correct us if we're wrong, to help you by explaining some more of the depth and the processes behind what we've been doing. So Shane has a lot more interesting investments than I do. His stuff's very unique. My stuff's very boring. So we're going to dive on in. Shane, give everybody, in case they're just tuning in now and they missed the last podcast episode, which you should go watch, but let's just catch everyone up to speed. Tell us what was it that you were investing in? How is it panning out? And we'll go from there.
So I think a good generalized overview is good to start. I believe in a very diverse portfolio. So I have my house that I currently own, which Grant Cardone would say, don't do that. Don't own your main house, which I think is a little hypocritical because his entire portfolio, for the most part, is properties. I know they're not single family residences, they're more apartment complexes. But anyways, I own
Why
my
is that
home.
hypocritical?
Well, because he says don't own your own home, yet he's like a huge investor into real estate, right? He owns a ton of real estate.
Yeah, but
So
they're not his homes. They're apartment complexes.
but he still owns them.
But you should own cash flowing assets, not your freaking home, which isn't a cash flowing asset.
Is it not?
It is
let's,
not.
let's dive into it. Maybe
How much cash do you generate from your personal home?
So for your personal home, it's all condensed into long-term value. So when I personally bought this home, I bought it for 1.475 million, and right now I could sell it for 1.62. So if I sold it today, I would make about $150,000, and I've lived here it'll be in 2 years in March. So there is not essentially your cash value, but when you're looking at homes or residential properties, you need to look at two things. If you're renting it out, it is cash flow. If you're not renting it out and you're holding it and you're doing flips or refis or quick sales, whatever it is you're doing, and your other option is long-term value, which really condenses down to the market, the area that you're currently buying the home in, which is why I transitioned and moved everything into Las Vegas. So I own my home. I have 2 rental properties. One is also in Las Vegas, and the other one is in Austin, Texas, and Round Rock. I'm a huge investor, as pretty much all of my friends and colleagues know me, into precious metals. I love some gold and silver, and I can't wait to talk about that. I have a very big trading card portfolio compared to sports cards. I've even created my own trading card game. I'm also invested into crypto, into the stock market. And then I would also say, as far as physical assets that hold value, but I don't consider them as far as investments, would be watches, shoes, and vehicles.
So before we dive in your diversity, I still agree with Grant Cardone, because I think that if you're just going to live in your house, it doesn't make any sense. But his whole point isn't just don't have a house, right? It's don't buy a house before you buy cash flowing assets. I think he says it in a way that causes controversy so he gets engagement. But
Right.
that's really his point. He's like, go get the assets first. Don't live in a home because it's not going to generate you money. You're going to put all your money into that. Pay less rent. Go get something that cash flows. And once it cash flows, or you have enough cash flow, then go get a house because it's taken care of and you're not spending on it. That's like the elongated version, but he never talks about that because that won't create actual content, right? So
There's
I
multiple ways of looking at it, though, right? Because
yeah,
you could have assets outside of rental properties like businesses and things like that, which he's also invested into.
sure,
But the biggest thing that I look into, and just why, people buy cars like Toyotas, is it's going to hold their value. And based off where you purchase your home, if it's in a growing area, then it's going to have long term value. Like I said, for my home and even the previous home that I went into, I lived in it for 5 years and it doubled in value. Now, that's not always the case because, like I
right.
said, it really depends on the economy and where it's going and rates. And unfortunately, it goes with the unemployment rate, essentially just the economy in general. So it's not always going to increase in value, which rent, you're pretty much fixated on a flat price that you know you're going to pay no matter how the economy does. There's pros and cons. However, I disagree with that theory of not owning your home strictly because of the value aspect.
Yeah, I'm on the opposite side of that. I don't want to own a home because I think it's, in my opinion, I think it's silly to hold something because it's going to have long-term value when you could really utilize that money on the front end 10 times better and more effectively than holding for X amount of time. Plus, there's also fees and costs associated with buying and selling, or more so selling. So even that, if you don't hold a home for X period of time, you're going to lose money on selling it. You're forced to stay. Whereas because I rent, I pay a low amount. I don't have taxes. I don't have any of that crap, and I can move whenever I want. And I can still go ahead and spend my money on other things. So I'm actually a bigger fan. I lease cars and I rent my apartments because I don't want to own this crap.
So there's also other ways of looking at these too, right? So if you're going to own the home for a minimum of 2 years, there's a thing called a 1035 exchange. So essentially, if I've made, let's just use $200,000 as far as an investment or as far as a profit is concerned, if I 1035 exchange that, meaning I'm not going to pay capital gains and I'm going to utilize that money for other properties, other property, I can do that. So one, I don't have to pay taxes on that. And like I said, I've only lived in this home for it'll be 2 years in March, so about a year and a half, and I've already gained about $150,000. I don't know too many other investments where you can put anywhere from 10 to 20% down on a home where you can gain that much value within under 2 years. I'm sure there is ones out there, but they're probably very risky, like my crypto portfolio. However, looking at it from one sided is not the way of doing it. And I personally have nothing but good things to say about home ownership because I've owned homes for the past decade, right? Even when I was younger. And to be honest, they're some of my most profitable investments. Like I said, my previous home before this one, I lived in it for 5.5 years and it literally doubled in value. So I made that much money on it.
It's not bad. I mean, it depends on the lifestyle you want to live. I like mine. I don't want to own a house, and I have zero desire to do so. So I will continue to stay on my side of utilizing the money in different
You
ways.
guys also need to know that he's a huge supporter of Grant Cardone. He gets Grant Cardone weekly, postcards, everything like that.
The man texts me happy birthday, and at the end of it, he says, "Don't own a home."
He has to say that in every postcard.
Every postcard, he says, "Whatever you're doing, just make sure it isn't buying houses."
Right. I hope the family's well. It's good to hear from you. By the way, don't own a home.
And then there's a PPS. But if you know anyone selling a home, let me know.
Right. Unrelated topic.
For a friend of mine.
Right. Exactly.
So Shane, why don't you tell us a little bit about what you found being out of all of your diversified investments? What have you found to be one that has given you the most yield or the biggest returns over the years?
So I will tell you right now that I've been doing precious metals the longest. So I've been doing precious metals. My grandfather actually got me in since 2007. And he essentially told me to treat this as a savings account. So, and I'm so glad that he did and very thankful. Because back in the day, this was when gold was under $1,000 an ounce, which now it's $2,500 an ounce. And silver, to my recollection, was $6, $7, which now it's over $30 an ounce. So every paycheck I would invest money into it, and I've only cashed out my metals 3 times in since 2007, and all 3 times I've made tremendous profits. We're not talking huge, but anywhere from 150% to 300%. And when you treat something like a savings account that you're just investing in, that you actually have that's physical, and you know where to buy and sell it, it's a no-brainer. But it's not going to be as something as profitable like a stock portfolio, right? If I invested into Apple and Tesla stock when COVID started, they just skyrocketed, right? 200 to 300% within 12 months. That can happen. That's great about stocks. But you're also going to make capital gains on them if you end up cashing out. So I would say my most profitable investment long term is definitely going to be precious metals. It's also the safest one as well. Now, recently, I kind of want to dive into cards and, this whole entire hobby that just completely boomed since 2021. I'm sure some of you guys have heard about sports cards or Logan Paul getting into Pokemon cards. The entire hobby. Imagine everybody who were kids opening up these packs when they were younger, and now they are adults and have adult money and just buying everything under the sun, as you can see behind me, which are expensive boxes and packs and things like that. You can make a great living on these cards and this hobby. However, there's a lot of risk involved as far as resealed boxes, resealed packs. You have to find good partners to buy and sell from. So, with the reward comes the risk. So as you've probably seen or haven't seen in the earlier episode, I'm getting out of cards. Watch that one. Watch why I spent all this money on cards, on investment, on a hobby that I loved, and why I'm getting out of it. And you'll see why.
Didn't you also just get like a really big new delivery of
Big new
something?
delivery. I did get an uncut sheet, which is not cards, but it's got a big uncut sheet of a trading card game that I've been a fan of since I was a kid. And I got it hanging up on my wall, which is wall art, which is also a write-off, as it's, I got to use the paraphrasing here because it is considered art. But art is an actual write-off. I'm using it. It's in my office, so it's a write-off. It's nice to be able to call it that too. But yes,
All
I
right.
did get that delivery in there. Vin follows my account there.
Yes, I do. So tell us a little bit about, like, for instance, okay, if somebody wanted to get into precious metals, what would they need as a feasible starting point, or what would be a good way for them to start doing it? You mentioned that you would take some of your paycheck and you would start. Do you feel like it's still feasible for somebody who might even maybe not be an entrepreneur, but somebody who's even in a 9 to 5? Could everyone start getting into precious metals, and how would they do that?
Yes. And I can't tell you how many people I have gotten into precious metals by just having a conversation, by showing them the charts. Go to Kitco, KITCO.com. It essentially is a precious metals chart where you could see how precious metals have been doing for the past 10 years, 15 years. And you could see how the charts have essentially just looked like this for the
Oh, hold
past
on,
10 years.
Shane. Make sure you mention this is not sponsored. Shane
Oh,
is
no.
just giving you
Kitco is not.
advice from things he's done.
Kitco is not a site where you can buy anything. Okay. So it's just an analysis website where you can literally check history data of how precious metals have done.
I know, but you got to
So,
make sure that you clarify this is not an ad
not
for
net.
for the sake of not getting sued.
Go to Google. You can name Google, right? Go to Google and type in precious metal or gold from the past 10 years. Show me the charts. Silver, same thing. Anyways, you can purchase this with any amount of money. 1 ounce of gold right now is $30, $30.50. That is a start. And then that's why they call it stacking. Every time you have some extra money, instead of putting it into your bank, put it into something that's tangible. Put it into something that you can hold into. I mean, there's very reasons to hold it into a safety deposit box, into a box under your bed or under your mattress, or hopefully a safe, is the best way of putting it. But these are physical, tangible assets. There's multiple ways of purchasing this. You can go online. There's websites, which once again, this is not an ad, but
There
there's
we go.
very reputable websites that you can go into and you could purchase these. So I would just look at that. Look at some of the ones that have tremendous feedback. I'll give you two: Gold Bureau and APMEX, APMEX. Very huge, huge organizations. We're talking about multi-billion-dollar companies that you can literally create, you can buy, and they'll send it right to your house. And guess what? When you want to sell it, you can sell it right back to them. There's multiple ways of getting into this. You'll even see some cash for gold places anywhere you go. I'm sure you'll see some sign twirlers. If you haven't seen it, they're not marketing it well enough. But there's tons of we buy gold places everywhere. Guess what? They also sell it. Go find out. Go find out what you can get. Regardless, the point of the idea for metals is to not make a quick buck. It's to have your savings account invested into something that's tangible that you have that is going to appreciate or depreciate on a low amount. This is something that is not going to go anywhere. They utilize it for jewelry. They utilize it for car parts, for carburetors, catalytic converters. That's what I'm thinking of. Catalytic converters. This is something that used to back the US dollar. I personally think that precious metals has a huge future. And I highly, highly encourage doing your research and treating it as a savings account. And when you're ready to cash out for those 3 times that I've cashed out to better your situation, whether it's for a rainy day and you have to have it and you need that cash right there, or whether it's for a bigger, better investment that's going to pay you bigger dividends, that's what it's there for. Utilize it.
Here's a question. I've heard a lot about buying gold and metals before. And I hear that there are some companies that you could like buy a fractional amount and they'll hold it for you. And then there are other companies that like you could just go and straight buy gold and they'll ship it to you, right? And you'll have the physical piece. How do you avoid the scammers? Because I've heard like, oh, you'll do the thing where it's like, oh, don't worry, we'll hold the gold for you. And then once you buy X amount, we'll send you a full bar. But then it turns out to be a scam, and you've now given these people like the amount of a full bar of gold over the course of a few years or so. So how do you avoid those things, or like what should people be looking for if they're going to start buying metals?
So the biggest thing that I could tell you is I've never done certificates of metals. I've never said a receipt of metals. If I had some extra cash and I wanted to purchase something, I need to get that right now. I need to get that physical, or I need to buy it from a reputable company like the two that I listed and know that they're going to ship it to me. Now there is fractions of metals, as Vin was saying. For instance, you could buy 1/10 of a gold ounce, which is, 1 ounce of gold is $2,500 right now. So 1/10 is $250. However, if I give you $250, you are giving me 1/10 ounce of gold. So I personally haven't been scammed by a certificate or receipt or somebody else holding it. The go-to rule of thumb is if I'm giving you cash, you give me this product, because that's what it is. It's a physical asset that I need to hold.
Makes sense. I like it. So you heard it here, folks. You know what, Shane? We should probably also put those links for people if they're curious to check out how they could start getting into precious metals. We should put that in the show description, and we'll help
I
them
want
out.
to talk about one more thing here, because I haven't talked about it, and I think it's very crucial, especially getting into Grant Cardone, is my rental properties.
Sure. Yeah. No. Listen. We weren't cutting the episode. I just wanted to assure people they.
I'll drop some links below so you guys can get it. Once again, this is not an advertisement. I don't get any sort of commission or affiliation. This is just going to be generalized links, where I know that they're a reputable company, and the other one is essentially just viewing charts. It's even an app on your phone to just view charts.
Not only is this not an ad, this also isn't financial advice.
Amen to that. All right. So rental properties.
All right. So
I,
wait, before you jump in and just
please.
generally talk, I have questions. as the viewers have questions, I'm sure too.
Yeah.
Again, similarly to the gold, right? What do people need to get started in the rental process? Could anyone get started? Are you able to do it if you're carrying debt? I have so many questions for you. So let's go ahead and go through a few of those.
Okay. So the very first one is rental properties are looked as an investment. So, to my knowledge, and this is just because this is what I've been told, you cannot utilize an FHA, right? A first home buyer loan to purchase a rental property because it's considered an investment. So,
Mm,
usually they require you to actually have a main residence, is what they call it, before you can purchase a quote unquote investment property, which would be your second property. So it's a different loan entirely. So qualifying it would be essentially your DTI, your debt to income ratio, and on an investment property needs to be low. So these are strictly for what I'm purchasing, which are single family residences. This is what they wanted from me. This is what they've looked into me for purchasing these couple of rental properties. That's what they've required.
mm. Okay. So if somebody has debt on their name, would they be able to still potentially get a loan and go get a house?
So debt is you can't use debt so loosely. It's really debt to income is the biggest thing here, right? Because my homes, right, even for the second rental property, I still have a mortgage on my main residence. I still have a mortgage on my first rental property. So debt is fine. That's really what you want is you actually really want to accumulate debt. The more debt you have, the more banks will actually favor you into loans, which I know sounds crazy. Now, but once again, we're talking about debt to income. So let's say that your debt to income is you owe $3,000 a month. That's totally fine. If you owe $3,000 a month, you need to make at least 2.5 times that to be approved for this additional investment loan. So now I need to make around $8,500 to $9,000 a month to be able to qualify for an investment loan. Now, once again, an FHA loan or your first time home buyer loan, they will actually help you out, but you can't utilize that for a rental property. There's very big restrictions for certain kinds of loans. It has to be FHA is your first home residence. It means you're staying in there. You can't rent it out.
Okay. Interesting. What happens if you do rent it out?
Don't know. I haven't gone down that route. I
Okay.
don't know.
All right. So Shane, there's something you guys could Google and let us know in the comments if you go ahead and you do know, educate us. So, okay. So now we went over that. And what's it like, or what is the process to get it to a space of profitability? Do you typically buy a fixer upper, or do you buy a home that's pretty much done and then you just try to rent it? What does that whole process from A to Z look like?
So that's why there's different ways of doing this, right? The turnkey method, which is essentially you're buying something that's ready for people to move in. It's spotless, you don't need to do any work, is essentially what I look for, specifically because I don't have the time to look for a contractor, upgrade appliances, upgrade the landscaping, the blinds, the solar, the any essential upgrades that a flip would generally need. I don't have that time because I'm investing it with my family, I'm investing it with my other businesses. So I look for turnkey ready homes, something that I know a property manager can oversee, that can show the entire property, that's not going to consume any of my time. However, I pay that fee.
Mm,
So property managers usually will go anywhere from 7 all the way up to 10% of the mortgage on a monthly basis. So when you're looking to rent a property, you have to keep that in mind. So for instance, if my mortgage is $4,000 a month, the property manager is going to charge me $400 a month to actually manage this property. So now I have to factor that into the rent. So if I'm asking for $4,000 for rent to offset my mortgage, I'm now losing $400 a month for paying the property manager.
mm. Well, here's a good question. One is, do all property managers typically do that? And number two is, what would the duties of the property manager be? Are they the guy that are going to
Great question.
like you're not going to call Shane if there's a problem with the property, you're going to call the manager. Is that how that works?
So there's different ways, or there's different things that a property manager does. The biggest thing is the upfront work that they do is they'll take high resolution photos and they'll advertise it everywhere imaginable. Social platforms, Zillow, realtor.com, Redfin, pretty much anything that people are going to be typing in rental properties in this area, you want your home to pop up, look really nice. At that point, if there's an issue with the home, they're going to contact the property manager and the property manager is going to take care of it. So that's the biggest, it's almost just peace of mind. Now, a
Okay.
lot of people don't hire property managers because usually their rental property is within a vicinity of their main residence or somewhere where they can essentially take care of it themselves. For instance, when I rented my home way back when, I would just call the property manager when the refrigerator went out. When I had a leak, and that property manager would contact a plumber or electrician or something like that. They would come out and take care of it. I didn't even know who the owner was. So it's essentially that person is your go-to person for any issues.
How do you find a reliable property manager?
I actually just Google and I look at reviews, just what I expect from people to Google my company. When they type in the VA group, they see reviews, they see testimonials, they have peace of mind. That's really what you want. So do your due diligence. Don't hire the first person. Even when I got recommendations on a property manager, you need to interview them. You need to get a good feeling with them. It's everything like you normally would when you're interviewing a person, an employee that you want to see if is this the right person that's going to, do the best for my house.
Makes sense. And then I think I got two more questions for you. One is, how do you find a good tenant? What is the process to do that?
So I actually don't find the tenants. The property manager does that. But the property manager, this is why I went with the property manager in my Summerlin one compared to me doing this, is they will actually do references. They'll make sure that this person or people are actually currently employed. They have good rental history. They'll do a criminal and financial background check. To be honest, even if everybody passes that and they pass the interview, which is just a standard interview, they pass all that, you still don't know, right?
Yep.
It's almost you cross your fingers and you kind of hope for the best because you
Yep.
do hear those general horror stories. So there's literally only so much you can do. But if you pass a criminal background check, a financial background check, you have good rental history, you're currently both employed, and your boss says lovely things about you, what more can you do?
All right. And then my last question would be this: to make sure that you keep it fair for the tenant and that you are still turning a profit, what would you say is a good rule of thumb to charge for rent? Like you mentioned, okay, so you got 4,000
This is why I
plus
was
400, right? So how do you calculate that without the potential renter feeling like you're price gouging?
So this is exactly why I wanted to talk about this. I am losing money on both of my properties.
Hmm.
Both. The reason why is I pay 8% and 9% for my property management fees, and that's just strictly based off of competitors and who I felt was good with. But I'm losing a good amount of money, and I'm not going to give you exact figures, but I want to stick with that 4,000 range. If my mortgage was $4,000, and my renters aren't coming in, and I've marketed this home for a month, that means that my price range is too high. I now need to lower it. So now I go to 3750. If I don't find a renter within that next month of lowering it, that means I have to lower it again. So it's exactly what I've done for this property. My property that just rented is now at $3,500 a month. I'm just using fake numbers here. On top of that, I have to pay what the rent is, not mortgage, excuse me, to the property manager. Let's just say it's 10%. So that's $350. So now I am losing. So that's what, 3150, and my mortgage is 4,000. So why? Why do this, Shane? I don't understand. Why pay an additional $850 a month to have a rental property? And that's what I wanted to start off the conversation with. That's why I want to talk about it with how I started the conversation. Is value. Why did I buy these homes to begin with? Even if I knew that interest rates were high, which they still are. By the way, I got both of these homes in 2024. So why did I get them? I personally believe, based off of my research, based off of the people that I've talked to, that these two territories, Round Rock, Austin, and Summerlin, Nevada, are going to be growing in the next 3 to 5 years for reasons I'm not going to dive into because it's going to take too long. So I personally think that my value of the home is going to increase regardless of what happens, right? There's things in my opinion that is economic proof. Real estate is not economic proof, but if you have a growing city and demographic that's continuing to rise, that continues to be more populated, I believe, in which I believe these two cities are, that's why I bought them there. So am I willing to lose money monthly to gain for long-term value on the back end? Absolutely yes. And that's the reason why.
I think that's one last thing that we should ask before we end off the episode. You don't have to go super in depth, but for anybody that is looking to potentially get a rental property, they should know how to properly read a demographic. How do you come to a conclusion, or what kind of research do you have to do, or background do you check to see if, and obviously it's always a gamble, right? But what gives you the certainty that you've looked into to project that this will be a worthwhile investment and grow?
Well, I want to say first that the up and coming territories that have high property taxes and that are turnkey ready, you don't buy these homes for cash flow. You don't. You buy apartment complexes, duplexes, quadplexes for cash flow to get an extra two, three, four, five, hopefully more, $100 a month. You buy the homes that I'm talking about for value, for long term value. So what I personally think in the cities that I know, which I don't research cities that I don't really know, for instance, Summerlin. So let's dive into this. I personally think that Summerlin, which is one of the most high class areas of Las Vegas, which is West Summerlin, they have a new casino there called Round Rock. Las Vegas is going to be getting the baseball team. They just signed a 10-year contract with F1. They're getting a basketball team here within the next 3 years. They're building an additional airport. North Las Vegas just got approved for a $100 billion renovation, which is 20 minutes north of where West Summerlin. They're growing. The population is increasing. The property taxes are high, but where do the high class, higher echelon people, where are they going to want to live? They're going to live in the nice new area, and that's in West Summerlin at the moment. So that's what I look into. What is the city doing? Why do people want to live here? And that's personally what I look for. Is the city growing?
That's a great analysis, and I think a lot of people should do that, right? Because there's always fear of loss in investing, which you could always lose in investing. There's always a 100. There's always I'm sorry, I got that wrong. There's never 100% certainty in any investment you make. However, there's always an opportunity to lose every penny you make. Now,
Absolutely.
we have levels of certainty based on what we're investing in, like gold. If you think gold is going to go to zero tomorrow, that's extremely highly unlikely. Could it happen? I don't know. If there's some freak reason as to why it would do that, then maybe, but I doubt it. So it's like, okay, we could look at the risk of gold being somewhat low, right? And Shane, to your point, there's levels of volatility in investing. Like investing in a startup, high volatility. Investing in gold, low volatility. Investing in real estate, I'd say that's somewhere mid volatility, especially if you're looking at growth areas. Like Shane just let out all this great information as to why he chose that space, but what if the $100 billion deal gets blocked? What if the new casino gets shut down for something? Or what if X, Y, and Z happens? Or what if they realize the zoning for the airport just isn't right and they decide to trash that project? So there's always something that could come up, but then you look at likelihoods. Are they really going to strike down a $100 billion development deal? Most likely not, because that's going to do so much for so many people that I can't see that being strike down. It could be, but highly unlikely. And so whenever you're going to make an investment, there's a few things to consider, which I would say is risk factor, your comfort level. I think a lot of the reasons that people fail in investments, and Shane, I'd love to hear your thought on this. A lot of the reasons people fail investing is because they're too emotionally invested in it, because they couldn't handle the level of volatility or the discomfort of what came with holding on to that investment or staying in that investment or what it actually looks like. Because a big part of investing is actually your mindset and how you're able to view things. So Shane, what's your take on that?
My general thoughts is that people don't know what they don't know. They're either too lazy to research themselves. They have FOMO, which is fear of missing out. And I think they're just so distracted in their own ways that they're just comfortable with their existing lifestyle. And they're like, no risk, no reward. I'm safe. I'm comfortable for where I'm at. So if you're looking to invest, you need to get out of that mindset. You need to do your research. You need to determine the risk factor. And more importantly, you need to ask questions to the right people. You need to get that type of information. So I really think it comes down to all of that.
I love it. Well, listen, guys and gals, we are going to end today's episode. Next episode, Shane, you want to give them a sneak peek of what they could expect?
So next episode, we're going to do a deep dive into Vin, into his conglomerate of businesses and into investments as well. And I think, to be honest, I'm kind of excited because I probably want to buy into a laundromat. I'm sure you guys have questions before too, or I'm sure you've heard about this, or at least you've seen Breaking Bad, and that's a great way to, funnel in money that's, not really there. We'll see. We'll see what's happening. I mean, maybe he's using this as a front for money laundering. I don't know.
We don't just wash clothes, we wash everything.
So we're going to find that out on the next episode. So you got to stay tuned.
Thanks for joining us, everyone. We appreciate it. As always, like, comment, subscribe, turn on notifications, share with a friend. Let us know if you got any value out of this. And hey, here's another question, or here's another thing for you to do. Ask questions. Leave them in the comments. We're happy to answer. If you got anything you're curious about, if you want us to elaborate on anything, always know we are here for you. We are here to engage, and we want to provide value to you. So let us know how we can do that. As always, I'm your host, Vin.
And I'm Shane.
See you later.
Good luck, guys.